Hi, Dave Sievertson, Cincinnati General Insurance Agency, with a few quick tips about disability, individual disability insurance. If you're an employee, you may have group disability insurance through your employer. That could be a very good policy, great. It could be a not so good policy, which if that's the case, you might look at getting a supplemental individual policy to go with what you have at work. So mainly this is for people that are self-employed. If both spouses, again, are working, both are self-employed, again, just like with life insurance, you're going to want to have a policy for each spouse. Um, the benefit period. The period that you're going to receive benefits if you become disabled could be 2 years, 5 years, 10 years, to age 65, lifetime. And obviously, the longer benefit period that's guaranteed to you, the higher your premium is going to be. So, it'd be great to have lifetime benefits or the age 65 benefits, but if you can't afford that premium, it doesn't make any sense. It's a case of something is better than nothing, and in reality, most disabilities are around that 2-year, 3-year time frame. So, again, the longer your benefit period, the more expensive your policy. The other moving part of this policy is the elimination period, or waiting period. So I'm going to pick a waiting period before my benefits begin. I become disabled, I'm in an auto accident, broken leg, whatever, I can't work. I can pick a 30-day, 90-day, I skipped 60, I guess, all the way up to 120-day waiting period. Now, this is the inverse of the benefit period, meaning that the longer my waiting period, the lower my premium is going to be, because the less the insurance company theoretically is going to pay out. A lot of things will take care of themselves over the course of 120 days. If you expect your future income to increase, you're recently out of medical school, you got your residency, so once you get your specialization, you make a lot more money. You started a new business, you expect it to grow, to do well. So you can purchase an option that will allow you to increase your benefit, your monthly benefit, the amount they're going to pay you over time at future increments without going through medical underwriting again. So that's an option to consider. When you purchase a policy, you want to make sure you get a policy that covers your own occupation versus a policy that covers any occupation. Okay, so here's the difference. I'm a surgeon. I'm in a car accident. My hands are disabled. But under any occupation, I guess I could go to work as a telemarketer. So I could do lots of different things. I could go into sales, sell cars, but obviously you don't want to do that. So for most folks, it's going to make sense to have that stipulation being your own occupation. And then finally, you want a policy that, again, let's say I'm that surgeon again, and I've got a tremor in my hand, something that I've developed for whatever reason, and I can't do surgery anymore. Okay, and I was making $500,000 a year as a surgeon, and now I go to work as a general practitioner because I can do that because I don't need to use my hands for that. And maybe I make $250,000 a year. Well, you're going to want a policy that's going to pay you the difference, and that's going to allow you to work, allow you to have that income, but pay you the difference between the $250,000 that you are making and then the $500,000 that you were making. So just a few quick tips on disability. Obviously, it's a much more complicated subject. We invite you to contact us for more information. Thanks.